Today, we've got Mike Kline with the Mortgage Network of Ohio telling us all about the different types of loans and the process. The process is important, folks, on how to get a mortgage and what's the best interest for you with the best interest rate. Think about that. Come on in and let's talk numbers.
Welcome to the Dayton Approved Podcast with Frank O'Neill. This is where the local Dayton businesses get a spotlight.
Welcome to Dayton Approved, exploring Dayton small businesses and nonprofits with Dayton Discount Furniture. Today's guest is Mike Kline, and he is with the Mortgage Network of Ohio. So we're going to talk all about finances and mortgages and numbers, and I'm sure everyone's excited about it. So the first thing we like to start off with typically is talking a little bit about the mission statement. So there's a couple pieces of the mission statement that I saw here, Mike, that I really kind of liked, and I was hoping that you could explain a little bit better to us in the audience. And that is, you really kind of focus on home purchases or refinancing, I guess you could say, for 1 to 4 family homes.
That's right.
So tell us a little bit about that, like how you got, or why you decided that, or why that's your primary focus.
Okay, so my background is primarily in residential finance.
Okay.
So that's defined in mortgage lending, residential homes as being 1 to 4 family homes. So it might be it's mostly single family homes, but duplexes, triplexes, quads.
Yes.
You know, those are all considered residential housing.
Okay.
If something has 5 or more units, it's considered commercial in nature.
Okay, so then you had to do a whole different process.
Correct. The qualifying standards for commercial loans are different, and loans are qualified differently, for those commercial type loans. All commercial loans, for the most part, are what they call portfolio products. So they're offered through local savings and loans, banks, things like that. Whereas single family housing, most of the mortgage loan products for that are secondary market products. Okay. Which are for 1 to 4 family homes, and that includes conventional, FHA, VA, and USDA financing.
Yeah, I was going to ask you about that. So I know that you said that you strive to basically be the best in the industry for delivering, pricing and I guess you could say customer service with that.
Absolutely.
So why don't you tell us a little bit more about what those different types of loans you just listed off were?
Sure. So the most, so we call it the big 4. We got conventional loans, which if you've heard the terms Fannie Mae or Freddie Mac, those are conventional loan underwriting guidelines. And then there are 3 primary government loan products that are used to finance the remainder of the majority of the housing inventory where people borrow money to finance their home purchase.
Right.
And those government loan products include FHA, which stands for Federal Housing Administration.
Okay.
That is that program is administered by Housing and Urban Development, HUD, and that loan product was designed to promote affordable housing in all markets within the U.S.
Okay.
Then there's VA loan products. That stands for Department of Veterans Affairs, VA.
Okay.
And that loan product is intended to provide affordable housing, mortgage loan products for people that are either active duty military or honorably discharged veterans with a minimum of 6 months of active duty service.
Okay.
And then USDA financing stands for United States Department of Agriculture.
Okay.
And as the name indicates, that loan product is more specifically geared towards areas with low population density.
Okay.
So there's actually a geographic map where I can go onto a website, type a property address, and determine whether that particular property is in a USDA eligible area. Okay. And that has a couple of restrictions, but a couple of advantages that are pretty unique, as do all those loan products.
Yes.
For USDA specifically, it's a zero down loan product, much like the VA.
Yep.
And something that's that's a little more restrictive about it. Where there's a give, there has to be a take.
Of course.
With it limits the income within the household to 130% of the median for the area where it's located.
Okay.
And it does have those geographic limitations. So if you're buying in an urban or suburban area, it's not going to be USDA eligible.
Gotcha.
Yeah.
Okay. So yeah, you got to be out there a little bit, is what we call that.
Yeah. So, in our greater Dayton area, very little of Montgomery County, for example, is USDA eligible.
It might be. I would imagine if it's Montgomery County, it's probably out there, out probably closer to what is that called, Germantown?
Yes, as a matter of fact, Germantown is eligible for USDA financing, but the majority of the county is not. Whereas when you get to other counties in our metropolitan, greater metropolitan Dayton area,
Maybe like Greene County's got more.
Greene County has more than Montgomery County, and Miami County has more than Greene County, and Clark County has more than either of those.
Really?
Yeah.
I didn't realize Clark County had so much, because Springfield's a pretty big city.
It's
actually.
a pretty big city, but if you look at Springfield proper, within the context of the entire
Actual
county,
yeah, it's not that.
most of the county is cornfields.
Really?
Yeah.
Interesting.
Yep.
That makes sense. And then I know there's some counties in between there and Columbus, and those are probably definitely.
Yes, there's a great bet that just until you're running into the Columbus area when you're on that stretch of 70 that you're probably going to be in a USDA area. But it's a terrific loan product. And
Yeah, that's cool.
They all have their distinct advantages and and all of them are most beneficial to a lot of people that are buying or refinancing a home.
Is there as far as, honestly, I've never really actually, and I've known a lot about different loans. I didn't even know USDA was a thing.
Yeah.
So that's cool. So I'm learning as well. But do you have to have a certain amount of acreage? Do you have to have a certain,
It's a great question.
product you're going to be farming? Like what's the requirements there?
Here's what's interesting. So the purpose of the USDA is to promote affordable single-family housing in areas with low population density. But you might be surprised, the vast majority of properties that I finance on USDA loans do not have any farming activity happening on them. Yeah, they're just located in a more rural area.
Yeah, just in a tiny town.
Yeah, so
maybe like a one-stop-light town.
Correct. So there's a lot less population density, but most of them are just simple little homes like you and I, probably live in. You know what I mean? And normal everyday homes that with a normal everyday parceled off lot.
Yeah.
That's most typically a quarter, a half, 1 acre of land.
Right.
People when they hear agricultural loan or United States Department of Agriculture,
they kind of go where my mind was.
Absolutely, they think of a farm.
Yeah.
But in the vast majority of cases, that's not it. It's usually just a simple single-family home.
Yeah. Wow, that's cool. That's good to know. So tell us more a little bit about VA loans.
Oh, VA loans. That's one of my favorite products to administer. They're like my children. I love them all.
Yeah.
but I do a great deal of VA loans, and that really has to do a lot with the fact that we're in the Dayton, Ohio area, and one of our largest employers, is Wright-Patterson Air Force Base. So I work with a lot of active duty military and retired veterans that that need financing. In most cases, if someone qualifies for a VA loan, they're gonna benefit by using that loan product if they're eligible for it.
Right.
It's surprising how many veterans don't use their VA eligibility.
Yeah, they don't use their benefits. It's literally a benefit that they should use.
And it's funny, but I don't believe that most loan originators ask the applicant, have you ever served in the military?
Right.
And if you did, were you discharged after at least 6 months of active duty service?
Yeah.
So I've incorporated those questions into every single application that I do. And I do about 4 times as many VA loans as your average.
Because you asked that question.
Absolutely. Because I've incorporated that in, and it's such a large subset of our population here in Dayton. I mean, the Air Force Base is a really big deal here. And, and it's created a lot of opportunities for people that want to go in with a lower down payment and some other advantages with the VA requires no down payment, by the way.
Yeah.
And then a couple of other benefits are that typically the interest rates will be about 1/4 to 3/8% lower than conventional financing with comparable cost payable at closing.
Yeah.
And in addition to that, if someone chooses to put less than 20% down, which they often do on a VA loan,
Yeah.
they're not required to pay any monthly mortgage insurance like they would on a conventional or an FHA loan.
Yeah. So they don't have to pay PMI.
Pretty exciting stuff.
Is that what you're saying? Is that's what that's called?
PMI,
right?
private mortgage insurance. That's
PMI.
exactly right.
Interesting. So yeah, I mean, there's definitely some advantages there. Now the question is how many VA loans can a military member have?
That is a great question, and it varies depending on the person that we're speaking to.
Okay.
So right now, the conventional loan limit, let's talk about that first.
Yeah.
Is $806,000 and some change.
Okay.
For our current
So
year
it
that we're
depends
in.
not just on the number of loans; it also depends on the amount.
Correct.
Okay.
So the loans that are outstanding with that veteran,
Yes.
they can have they can be up to a sum total of $806,000,
Okay.
and the veteran doesn't have to make any down payment.
Right.
For any amount that they owe exceeding $806,000 between the mortgage that they're taking out and any other properties that they own that have that are on their VA eligibility, maybe they're renting them now and they live
Yes.
in them as a primary residence in a prior
Yeah.
location.
Now you're saying own, or not own, but owe. So like loan amount. So
Own
you
and
could
owe,
have $1 million
yes.
home and have a $500,000 mortgage on it and still be eligible for 300 more thousand.
Yeah, it's the 500. Yeah, it's the amount of the mortgage.
Okay, mortgage.
And what that mortgage balance was at the time that it was
Yes.
taken out.
Okay.
So people can have multiple VA loans. It's very common for me to have a veteran. Like I've got a couple that I'm working with right now that's relocating from California. They're coming from an Air Force base out there. They've got what they call PCS orders, permanent change of duty station,
Yeah.
over to Wright Pat Air Force Base.
Yes.
And they have an outstanding mortgage balance of about $400,000 on their California home, and they're going to purchase a home for about $350,000 here. They're going to do it with zero down payment.
Yeah.
They bought their other one for down payment, with zero down payment.
Yeah.
So that's a tremendous opportunity, for a homeowner, and they're going to rent out the property that they have over there. The VA only requires that when you use VA financing, that your intention is to move into the property within 60 days of the time that you
Of the new
close on it.
property.
Correct.
Yes.
So you
Okay.
can keep a property from a prior duty station or a place that you lived before and rent it out, but the property that you're doing the new loan on, that
You got
has
2
to be
months.
your primary residence.
Yeah,
Correct.
yeah.
Yep.
For at least 2 months.
Yes.
Yeah.
But those are the big three, what I call the trifecta of the VA loan.
Yeah.
Okay.
Yeah.
The requirement that is zero for down
Mm-hmm.
payment, the fact that you don't have to pay any monthly mortgage insurance, which can save tens of thousands of dollars,
Yeah.
for someone at a higher price point over years. And in addition to that, the fact that the interest rate is a little bit below market compared
Right.
to conventional.
Yeah, so you definitely get a bunch of advantages there. Now, are you able to join in with someone like I know obviously like a married couple, but like let's say you have a friend that wants to buy a house with another person. Can you do a VA loan with a friend? As long-
No, that is a great question, and this is a unique thing to the VA. The only co-applicant that you can have
Is your spouse?
is your spouse.
Interesting.
Can't be boyfriend, girlfriend.
Yep.
It can't be mom, dad.
Really?
Correct. So it can't be another family member aside from the spouse that you co-apply with. That is
Wow.
a unique feature to the VA because it's really intended to service active duty veterans. Was how it was initially put out there.
Yeah.
But now it's widely used by retired veterans as well.
Got you. So, with the new current laws, if I were to marry a man,
Yes.
then I could.
Yes.
Yes.
And
so I
I've-
would have an advantage.
And I've had that.
yeah.
That is if it's your legal spouse.
Yes. No,
You
I
can
was
co-apply.
saying just so they could get a VA loan. I'm not saying
Absolutely.
it's,
Yeah.
I mean, you could do that.
It's okay.
Oh man, that would be interesting. Why do you get married to this guy? Well, because I wanted a VA loan.
I needed a good rate.
I
needed a good
times
rate,
are
bro.
tough. Times are tough. All right, let's talk about FHA real quick. So yeah, FHA, I guess, is the next one down the line.
Yes. So FHA stands for Federal Housing Administration.
Yes.
And that loan product, like I mentioned before, is really, it's administered through the Housing and Urban Development, HUD. And the program was initially put together, I believe it was in the 1930s, with the intention to provide affordable financing options, for people that are buying moderately priced homes.
Right.
So the FHA has a little bit lower limit than that, that $800,000 conventional limit. But it's still more than adequate to meet the vast majority of the Dayton market's needs. But the loan product has a lot less pricing adjustments based on credit score. So for a person that is that doesn't have a 780 or 800 credit score, and maybe they've got a credit score that's in the 600s. That loan product that FHA loan product is probably going to be a better fit because it provides still an option for a very small down payment. Typically 3.5% is the minimum required, what they call borrower contribution, aka down payment. And so with less adjustments for credit score, it makes the delivery of the product much more affordable from a closing cost standpoint.
Okay.
Than a conventional loan for someone with that credit score range. In addition, all people that qualify for an FHA loan get the same rate on their mortgage insurance, whereas that cost changes pretty dramatically on private mortgage insurance that's issued through private companies. The mortgage insurance on FHA loans is called MIP, Mortgage Insurance Premium. It's issued through the government.
Okay.
So that government mortgage insurance, it's the same cost for everybody that qualifies for the loan product, and that's going to be a lot more affordable for someone with a moderate credit score.
Yeah.
Than it would be if they used a conventional loan.
Okay.
So for people it also is more forgiving with some past credit issues, like bankruptcy or foreclosure. It has forgiveness for those things in a shorter period of time than conventional loan does.
Gotcha.
So it makes it a bit easier to qualify, to still get a low down payment option, and to get a more affordable delivery for a modest, credit profile.
Right. And that leads us to the good old-fashioned conventional loan.
That's about 70% of the loans that close.
Is it?
Yeah.
Wow.
Yeah,
so let's talk about that. What is that?
So conventional loans are oftentimes referred to as Fannie Mae or Freddie Mac. And those are underwriting guidelines that are intended to provide loans in the secondary market, which means that they can be sold from one financial institution to another. In other words, the servicing rights of the loan can be transferred, as they can with VA, FHA, and USDA. Yes. But a conventional loan is the most common loan product. And the reason that it's most frequently used is for a lot of people, that have strong credit profiles. Even if they're making a smaller down payment, some people don't even know on a conventional loan, you can, as a first-time buyer, do a down payment as little as 3%.
Yeah.
5% if you've owned another home in the last 3 years. But a conventional loan is oftentimes the most affordable option for a lot of people. And that is because a lot of folks have equity built up in their home, or they might be making a larger down payment, or they've got the high enough credit scores that they can get very affordable mortgage insurance.
Right.
So between those things, the conventional loan is going to be most suitable for the majority of people that are purchasing a single family home, certainly. And if someone's doing an investment property that happens to be a duplex, a triplex, or a quad, you cannot you cannot use certain loan products on that. Whereas conventional is really the default mechanism for those for those types of properties.
So that's what you got to use for those type of properties. Basically.
Well, you can do multifamily on FHA. You can go up to 4 units.
Yeah.
But
what about VA?
But conventional allows you to buy with an investment property.
Oh.
So VA, FHA, and USDA all require that the properties are owner occupied.
Right.
Whereas conventional.
So you could if you lived in one of the units.
Correct. So that's the most common house hack for somebody that's just wanting to get involved in investment real estate.
Yeah.
Is they'll buy a duplex or a triplex or a quad and they'll live in one unit.
Yeah.
And they're bringing in rental income that's maybe even more than offsetting what their housing expenses.
Yeah. Yeah.
Yeah.
Yeah, especially if it's a quad.
Absolutely. Absolutely.
Yeah.
I've done a lot of quads on FHA and conventional loans before for people that are buying their very first house.
Yeah. Wow. That's cool.
Yeah, it's pretty cool.
That is cool. That is cool. Now, the problem is they don't typically go up in value as quickly or as much as like a normal house.
Correct.
But you do get that money instant.
You do see
you
do see slower appreciation rates usually with multi-unit properties as opposed to single family. But they still do appreciate.
They
over
do,
time.
and they also generate income.
And they generate income. They also, like any other mortgage, the debt's being retired. As you go through the payment cycle.
Yeah.
So it's a pretty good move. A lot of people are doing house hacks these days, and I've financed a ton of them.
Yeah, yeah. Well, that's good to know. That's good to know. Maybe some people are watching this and they're going to say, Mike's my new guy.
Happy to help.
Well, the reason we went over all this fun stuff, I know it was kind of a little bit more of a long-winded introduction because there's a lot to deal with mortgages, and a lot of people don't really understand a lot of it. So I just wanted to make sure that we had somebody, that was an expert to explain it all. So the reason it's important is because you're a mortgage broker. So you deal with, I believe you said 16 different lenders.
That's correct.
So what that means is you're going to shop them. You're going to shop people around.
Correct.
You're going to do it professionally. You're going to do it. Probably do a little bit better job than like someone if they're trying to do it on their own.
Correct.
But more importantly, all the things you just explained really explains that there's different types of products, and if you go to just like I don't know what you want to call it, just like a one-man band where like they're dealing with just a certain bank, they're going to be forced to use a certain product, and it may not be the best fit for you.
Right.
Where because you don't have to do that, you've got multiple guys to choose from, you can actually spend more time figuring out what's the best fitted product for the customer, which is definitely, I know we have another question in the show that we also says, what makes you unique? That's obviously a unique thing, but talk more about how important that is and how that is kind of a differentiator compared to others. I think it's a good time to talk about that real quick.
Happy to do that.
Yeah.
So the fact that we that we deal with 16 different lenders essentially allows us to bring the marketplace to our client. So like what most intelligent consumers will do is they will have a conversation with a couple or a few lenders, just to make sure that they're getting good, agreeable terms. Well, we can broaden that search substantially. So what I do when I qualify a client that I'm working with is I first determine what the best loan product is, but then they're going to have access to the very best pricing and underwriting fit with all of the lenders that I work with that carry that particular product. And nobody's going to take themselves to 10 or 12 different lenders.
Right.
So what they're going to do is they're going to really get an excellent underwriting fit, so they get more approvals, and they're going to get a better pricing fit, so they get better terms.
Right. Yeah. So and then you, like I said, you're doing all the footwork for them.
100%.
And think about it, if you are going to like 10 different places, you're going to have to fill out 10 different paperworks.
Have your credit report 10 different times.
Exactly.
So effectively, the credit report that I pull, I can assign that to any underwriting system for any lender that I work with. So one credit pull.
One pull.
One
split 10
professional
ways.
that figures out what the best fit for you is going to be. You get the best pricing of all those options that are available, and you get more approvals because you've got a match on underwriting guidelines, that's best suited for you.
Yeah. I mean, I think that I would just want to emphasize, you have 16 different lenders. So, meaning the best fit, 6 of them may not be a fit at all.
Correct.
So it's like, why even waste your time?
Correct.
So if you're over there thinking, oh, I could just go to the 16 myself, you can, but you're doing, in theory, if you did do that, you'd be wasting time
Yes.
with 6 people you don't even have to deal with.
Yes.
So, I mean, saving time in itself is a massive value for a consumer.
There's enough to do when you're moving
Yeah.
and buying a home and trying to figure out how to get your kids into the new school district, relocate your furniture, maybe
Yes.
buy a whole lot of new
That's
cool
right.
furniture. There's a lot of moving parts when you're changing your residence from one place to another.
Right.
And being able to get the market brought to you so that you get the best fit in all those areas, and not only that, but you're getting the shopping done by a professional,
Right.
that knows how to compare, the
Exactly.
pricing from all those options very well, like the back of my hand. I've been
Yeah.
doing it for 32 years. That's a big part of the differentiator, or the advantage.
Yeah. I mean, it's, we were talking earlier in the pre-show. We can't remember what the old saying is, but we just know that, a lawyer isn't going to go out there and represent himself.
Right.
A financial guy, that was what my degree was in, was financial planning. It was always taught, you don't want to do your own investments. Even the best financial advisors have their own advisor.
Sure.
Because then you get too emotional.
It's personal.
Yes.
Yes.
So you got to separate that.
Yes.
When it comes to this, and I think that's what's interesting about houses too, to an extent, because you'll probably find that couple that's like, oh, I love this house, I love it, I gotta get it, which I understand that's good, but at the same time, it is business.
Absolutely.
And you bring in the business partner, like, we're going to get it done.
Absolutely.
Well, that brings us to your story. So let's talk about more of how you decided that this is even what you wanted to do, and everything. So I know I didn't ask you before, but where did you grow up? Let's start there. Were you here? Have you always been a Daytonian, or just an Ohioan?
I have not.
Okay.
Actually, my career brought me to Dayton, but I grew up primarily in Cincinnati.
Okay, so you are an Ohioan, though.
Yes.
Well, that's good. That's good.
Yes.
And now a Daytonian.
Absolutely.
So how many years?
So I relocated to this market in 1996.
Okay.
So I've been here for a long time.
Maybe longer than Cincinnati?
Than a lot of people.
Yeah. I would say probably, right?
Yeah.
Yeah. So, I would definitely say, you are a Daytonian now.
Yes. Yeah, I enjoy it. But yeah, the way that I got involved in the industry, I think you were asking me, is that I was finishing up my education over at the University of Cincinnati, and I was interviewing with different types of companies, trying to figure out what it was that I was going to do after I finished.
So was I.
Yeah,
so was I.
I mean, it's ready, fire, aim, right?
Right.
And and what happened was I ended up going through an interview process and a job shadowing process with a financial services company that was in consumer lending, and I was fascinated with it from the second that I stepped into the office and just started to observe everything. So I liked the fact that it was really dynamic, and it seemed like everybody was busy doing different things throughout the day. I've got a bit of a short attention span, so I like working on different projects and multiple things, and I really got fascinated with it. I got invested in getting involved in the industry. I ended up securing a job with a terrific company that put me through a 15-month management training program after I was done with school. And they paid me a little salary, gave me good benefits, taught me a lot. And then I began running a branch operation for them. That's when I moved to Miamisburg, Ohio.
Okay.
Or to this area.
Yeah.
The office was in Miamisburg, Ohio.
Yes.
And then, as time went on, I took a different position with a national bank that needed a lending operation started up all throughout Ohio and northern Kentucky. And I managed that operation, and then a few years later, I said, you know what? I think I could do this on my own.
Yeah.
So I started up the business, and 26 years later, after opening in 1999, here we are now.
Wow.
Yeah.
Yeah. I mean, that's that's definitely, you definitely learned a lot before you started your own.
Have to. Yeah.
So you managed a massive area.
Absolutely. Yeah.
Yeah.
All the markets throughout Cleveland, Columbus, Dayton, just all over the state of Ohio, and an area in northern Kentucky as well.
Yeah.
So it was 9 branch offices.
Wow.
And but there came a time, around 1997, where my wheels started turning, and I said, mortgage brokering really seems like it would be a great way to do it as an entrepreneur. Open up a business that is really focused on delivering mortgage financing to people in a way that's unique and different, than the way that it's being done in the market. And I opened the business with the idea of delivering top shelf consultation from the application through the closing process, and working by referral only with strategic partners that are professionals in related industries, such as realtors. I work with some of the very top realtors in the greater Dayton area. Also home builders and financial advisors. So those are the partnerships that we leverage to bring good services to the clients that we work with.
Yeah, no, that makes complete sense to me.
Yeah.
I mean, it keeps your marketing expenses down.
It does, and it's mutually beneficial for everyone involved.
Right. Yeah, everybody wins. It's like a power team, is what we call that.
Absolutely.
Yeah. Well, that's super cool. So you went to UC though? You said.
Yeah. I grew up like 10 minutes from there.
Oh, okay. I got you.
So I grew up on the west side of Cincinnati in Western Hills.
All right.
And it just made sense. It was the state school. Tuition was cheap. It was close by. That's where most of my friends from Western Hills High School were going to go to college. So, I ended up going over there, and I ended up working in the Cincinnati market professionally for a few years before I got relocated.
Yeah. Do you miss Cincinnati? Do you think Cincinnati is like?
Not at all.
No,
I'm just going to be honest with you. I do miss some of the people.
Yeah.
So I go back and visit with friends, and
of course
I go to the places and the ball games and the things that I remember.
Right.
But I love Dayton, Ohio.
Yeah.
So it's the perfect size city in my opinion. So we're big enough to have a good art scene, a good food scene, plenty of entertainment. But it's pretty wonderful to cruise through downtown at 35 miles an hour at 5 p.m.
Yeah.
No bumper to bumper traffic.
Right.
I mean, and it's a terrific part of the country to live in too.
Yeah.
So I'm a big fan of
traffic is huge.
Yeah.
I go to all these other places. I'm like, sucks. Traffic is terrible.
Yeah. I mean, we can get anywhere in this city. Any time of day.
Yeah.
20, 25 minutes
I
max
think maybe
from one end to the other.
The biggest traffic jam I see is like 35 to Indian Ripple or something, and that's like it.
Yeah. So you just kind of put it on pause. You don't exactly stop. You're just pacing it.
It's from like 5 o'clock to 6 o'clock. That's it.
Yes.
That's it. There's a little blimp.
We're very fortunate in a lot of ways in Dayton. And, our housing market is another great example, of what makes this a terrific city. So in relation to most housing markets around the country, we have a very affordable housing inventory. You can get a terrific home for a reasonable amount of money in the Dayton area, especially if you compare it to even some of our neighboring cities like Columbus.
Yeah, that's true.
Or even Cincinnati.
Yeah.
I mean, we have an affordable housing inventory. There's enough of it, that there's some to choose from. And inventories are starting to climb a little bit, which is really nice for home buyers.
Yeah.
But we have a good dynamic housing situation, which is great for me professionally, but personally, Dayton's a great place to have raised a family, and to run a business, and to be able to, enjoy yourself and get around freely.
Yes. It's got everything you need.
Yeah.
And it's just interesting because I've been to some other places and I'm like, there's things that just are missing. Mm-hmm. And I don't know, it's just because I've had it here in Dayton and I'm like, it's so convenient.
I tell people all the time I'm spoiled. I love it.
Yeah, it really is. It's so fast. It's so convenient. I mean, the food is great.
Yes. And there's good new restaurants to check out
Oh yeah,
You know,
always.
I've got several of my go-tos, but sometimes my go-tos even change a little bit. But there's still a bunch that I haven't tried, and
Yeah.
I mean, I get out and about. You know,
Yeah, yeah.
I mean, we really have a great food scene here in Dayton.
Yeah, yeah, and it's funny because my buddy from Savannah, Georgia, he comes and visits me probably 2-3 times a year, and he always says, "Man, I'm telling you, that food that you got in Dayton is underrated. I'm telling you, it's awesome."
And that's saying something because Savannah's got a pretty good food scene there.
They got a good food scene there too.
Uh-huh.
But yeah, he's like, I'm telling you, I don't get it. He's like, Dayton is a great secret. Cost of living's great.
Yep.
He's
Yep.
like, I love it.
Yeah.
I have a blast every time I come here.
I'm a big fan, so I enjoy going other places to visit, but I think I'll always call Dayton home.
Yeah, yeah.
You know, this is where I want to be most of the time.
Yeah, yeah, it's a great home base. I've said this many times, and then if you want to go anywhere, it's easy to travel. We got a couple good airports, Cincinnati, Columbus, and get you anywhere. Dayton will get you to the main places.
CVG's only an hour
Yeah,
away.
it's all convenient.
Yeah, CVG's doing international flights.
Yep. Same with Columbus.
Yeah,
Yeah.
I mean it's terrific. So yeah, we've got we got a small local airport, but we got 3 major cities that are all within short
Yep.
driving distance.
Yep.
And and travel's easy, and
A 5-hour drive radius, you can get everywhere.
Absolutely.
Chicago, Nashville, like it's crazy.
Yep,
It really
yep.
is. Got some Great Lakes to hit up, like
Yes.
literally the actual Great Lakes, but I'm saying
Absolutely.
like down south too. You can North Lake and Cumberland, all that stuff's there.
Absolutely, I've discovered vacationing in Michigan.
Yeah.
In the
I
summertime.
really haven't done that yet, and I heard it's great, especially when it's super hot here.
Oh, it's amazing. It's just
Yeah.
a little bit cooler, and they've
Yeah.
got an amazing amount of actually good beaches in Michigan.
That's what I've heard.
And it's just a few hours drive.
Yeah, and I heard the water there is a little bit nicer.
Yes, it's beautiful.
Yeah.
Yeah, there's lots of little towns with
Little
cool,
beach town things.
cool little
yeah.
breweries and and gastro pubs where they make good bar food and stuff like that.
Yeah.
I like Michigan for summer vacations.
Really?
Yeah.
I guess an easy little 3-day getaway.
Yeah, or a week.
Yeah, or a week. It kind of reminds me of the description, Portland, Oregon. My
Yeah.
buddy lives in Portland. I got a really good friend, and we hit like the coast. I just drove, and it was like a 3-hour drive. We just go hit different little beach towns.
That's fun.
and it was awesome.
I like getting out there and exploring.
Yeah,
that sounds like
it
a
was
good
awesome.
time.
And they've got this place called Pig in a Blanket, and it's a breakfast place that's just up there. And I got a shirt and everything, and it was great.
They got your memento.
Yeah. They
That's
had
cool.
I don't know if it's snow crab or some crab omelet. That was what they're known for, and it was phenomenal.
Love some crab, man.
Yeah, it was real good. Real
Absolutely.
good. Highly recommend it. So if you ever get out there,
Yeah,
yes.
will do. As a matter of fact, I'm going to fly into Portland for the first time
Really,
on a trip that I'm going to this summer.
really.
Yeah, so my youngest daughter,
Yeah.
she moved to Eugene, Oregon,
Okay.
and it turns out that's about 120 miles, I think, from Portland.
Yeah, it's
It's a college town. It's where University of Oregon is located.
okay.
Yeah.
Okay. So
And-
Portland's probably the closest airport. Then.
Yeah, so and they got a direct flight to Portland from one of our local airports.
Cincinnati.
Yeah. And-
Dude, so let me tell you, I know it's Allegiant.
Yeah.
They just started it.
Yeah.
It's the first time that anyone's done a direct flight, and he's like, because he's from Dayton.
Yes.
So he's like dancing, dude. He's like, you don't understand.
It's a big deal.
It's a big deal.
Yes.
Oh yeah.
So
that's awesome.
so it'll be one stop.
Yep.
Fly right into Portland, then I'm just a roughly 2-hour
Yeah.
drive into Eugene. Visit my daughter,
Yep.
see her new place.
Yeah, and you're back.
Yeah, and then just 2 hours back, one
Yeah.
straight flight. Before you had to do
Oh,
a little
connectors, it was
layover
terrible.
and a connection.
Oh, I know.
And, it was a 10-hour trip from
Yeah.
door to door.
Yeah.
So this makes it a lot
Oh
more
yes.
achievable.
Yes. Yeah. That's awesome that you're doing that.
Yeah.
That's great.
Yeah, that'll be my first time flying into Portland, but I'm looking forward to that.
Yeah. So I know we're burning up time, but that's okay. I will never forget first time I go to Portland to visit my guy because Portland's like weird.
Okay.
They even have signs that keep Portland
Well,
weird.
Portlandia, have you ever seen that?
Yeah.
TV show?
So they kind of show you a little bit of it, a little glimpse, voodoo donuts, all that good stuff out there.
Yeah.
The pink box. So I go to Portland and I'm like, whatever, can't be any worse.
Yeah.
And he's like, I'm telling you, it's Yellow Springs times 1,000. Like I'm telling you, you have no idea what you're in for. Like, okay, yeah, we'll see. So I get an Uber, and I'm getting off the exit. So I land, and I get on the highway, and we get off the exit to his house. Mm-hmm. And I see this homeless person, and there's homeless people everywhere. In
Okay.
Portland. They cater. It's like state law, like you got to have bottled water within like 5 feet of your door, accessible to everyone. Like they're really strict about it. Like
Wow.
yeah.
Okay.
So like they do all these weird things that ultimately encourages it. It's kind of wild. But homeless guy, not one dog, not 2 dogs, but 3 dogs he had.
A 3-dog homeless guy.
Yes, the 3-dog homeless guy. And here's the best part. And this is the best part. Remember, it's the first time I've been to Portland. First thing I see from the Uber guy.
I have trouble managing 1 dog.
Yeah. Guy's got 3 homeless, right? And he's got signs on his dogs that says "Kisses $1." The guy's pimping his dogs out. And I said, well, welcome to Portland.
There's probably been somebody that's paid for that, too.
Think about that. He's pimping out dogs, baby. He's pimping them
That's
out.
awesome. That is amazing.
Yeah, so that was my first interaction with Portland, Oregon. So you never know what you're going to see.
Okay.
You never know what you're going to see, but it sounds like you're going to be driving out.
I'm going to drive right out.
Yeah.
I'll get in the Avis or whatever. And
If you are thinking about buying stuff, no
Yes.
sales tax there.
that's interesting.
Yes, no sales tax.
Okay.
So they tax more. They get it backwards with a higher employment tax,
Okay.
but no sales tax. So anything you buy, it is the price what it is.
Okay. That's interesting.
So if you're like looking to get like Nike shoes, that's literally it's what I did. $120 shoes, I bought them there because there's no sales tax.
That makes a difference.
It is
Sure.
what it is. Yeah,
Absolutely.
So if you're thinking,
Save you $10 on your running shoes or
yeah,
whatever.
Yeah.
Yep.
So
you know,
nothing crazy, but it was an incentive.
it adds up. Yeah.
So if you're thinking about something, just remember.
Remember no sales tax. I will remember that.
Who knows? Like an iPhone,
Uh huh.
whatever. If you're thinking about something,
Yep.
save you a little bit of cash. Well, let's talk about how does your business contribute to the local economy and whatnot. I guess you could say that's the next question we're going to.
No, that's a good question. So, naturally, what we do is we provide funding for the purchase and refinances of homes that people live in. So, we're contributing to the housing economy, obviously, by helping to provide housing. But also, we are a support mechanism to our strategic partners. So, our business has a significant reach in that we're working with a lot of the local, realtors, home builders, financial advisors.
Yeah.
And we're acting as a support mechanism for all those businesses. So what we're doing is we're promoting, the housing economy. And the housing is a big part of the economy. It's about 70% of consumer spending.
Right.
If you look at the purchase of the home and all of the spending that occurs around the purchase of a home.
Oh yeah, I mean us alone with my business, it directly is related to the housing.
Absolutely, and so is mine.
Yeah.
There's literally hundreds of industries that are dependent on the sale of housing.
Yes.
And and when homes sell, they get financed. People are buying furniture.
Mm-hmm.
People are buying all the gadgets and gizmos to suit up their kitchen. They're doing remodeling. So they're supporting local contractors. I mean, the ripple effects of home sales go many deep. So I feel pretty proud about the contribution that we're making to the local economy in that way.
Okay. All right. Cool. Yeah. No, it's true. It's very true. I mean, everything you just said. So a lot of people, I don't think, realize how important that is, because when you buy a new home, I mean, it stimulates everything.
Absolutely.
It really does, because there's always something you got to have. There's maintenance, and even the finance. And you got insurance. I mean, you got to think everything.
Oh, and if you're a first-time home buyer, you're going to need lawnmowers and
Yeah.
rakes, and you're going to the the local hardware store.
Right.
And the ripple effects are far-reaching.
Oh yeah. So what are some things that set your business apart? I know we briefly talked about the 16 different financial institutes, and we also talked about the the reason why that is because of the best fit.
Yes.
But tell us some other things. you kind of briefly talked about the one-on-one, I guess, part. Let's talk more about
Yes.
that in this part.
So one of the things that I developed when I was initially putting together my business is I wanted to put things together in a unique way that really carries a lot of weight with service to the clients.
Okay.
So something that I've done is I've built a very unique consultation process that begins from the time that I'm referred to a client, and it goes all the way through the end. So we've got the process highly systematized so that I can deliver good, solid advice that's unique to that particular home buyer
Right.
or homeowner that's doing a refinance. So one of the things that's pretty unique is not only do I qualify my clients for the most appropriate loan product so that they can get the most mileage out of their dollar, but after that's done, I don't just send off a pre-approval letter and say, hey, good luck finding a house.
Right.
What I do is I do a follow-up consultation with them that's specifically designed based on their qualifications and the recommendations that I'm making to them that outline the specific product details of the program that they're best suited for, why that is a better fit than other products that I've mentioned, in this mix that we talked about earlier.
Yes.
In addition to that, I'll give them a itemized estimate of the approximate amount of funds that they're going to need for closing at the top of their price point. And I'll give them a methodology for estimating monthly payments both at and below the price point up to which they're qualified. So when they go to look at a home, they can size up that home, and not like a Zillow type estimate that's not personalized to the qualifications of the person that's clicking through. This is highly personalized. It's based on your credit scores. It's based on your desired down payment or the down payment that you qualified for. Localized cost for housing and home insurance. Localized cost for property taxes.
Right.
So I can have a client that's going home shopping with one of my referral partners that's a realtor, and before they even step into the home, they know what their monthly payment's going to be.
Yeah. See, there you go.
And I teach them how to estimate that with a thumbnail tool that is remarkably accurate.
That's awesome because all I can think about is when you say estimate is that flooring guy I told you about earlier.
that was quite a story. So
when you say estimate, that's why I'm over here. You're like, why is he laughing? I'm thinking about that.
My estimate method
it's pretty good.
It's really good. So it's usually going to put them within dollars of their actual payment at a specific price if they want to make an offer on that home.
Yeah.
So what I have is, and this is one of the reasons that I'm able to attract such strong referral partners, is because the clients that I work with are the most highly informed home buyers in the market.
Yeah.
They're also the best qualified home buyers in the market.
Right.
So I've already pre-underwritten that loan. When I type that pre-approval letter, it's gone through the automated underwriting system. I've validated assets, income.
Yeah.
I've essentially underwritten that loan.
You pride yourself on dealing with your process is top notch, so therefore
I've
you
made
expect
sure that
to
it
try
is.
and get top notch
Yes.
customers. Not saying that you won't,
Sure.
but like that's the approach that you go with. That's your product in itself.
And I think people have an investment, that they're making when they're buying a home.
Yeah.
And it's up to me to make that client a good client.
Yes.
And if I found that if people are given the education and the information that they need to be a good consumer of my services, that they're all ears because they're the biggest beneficiary of that.
Yes.
So if the information is offered and it's presented in a digestible way, where they can keep it, hold it, refer back to it if needed to refresh their memory, they make themselves great clients.
Yes.
So what happens is the referral partners and strategic partners that I work with, they benefit from that too.
Yes.
Because it makes their process a lot more efficient because they're working with well-informed, well-prepared, home buyers.
I mean, I think everyone's got different philosophies, but my philosophy is that I think people are inherently good and they inherently want to do right.
Yes.
They just are uninformed sometimes.
Correct.
And I learned that with financing, and we finance people.
Yes.
And I pride myself with not just my guys or in me, but my guys as well that work here, or gals, that we actually spend the time to explain the financing to them.
Mm-hmm.
We're not just saying, hey, here, sign the doc, let's go.
Right.
Like, you're getting furniture, this is going to be great.
Right.
It's like, this is what happens if you do this, in this time frame. This is what happens if you don't do this in this time frame.
Absolutely.
And this may not be a good fit for you.
Mm-hmm.
And yeah, of course I get upset when that customer's like, I don't know if I can do this, and they walk out.
Sure.
It sucks because I know that, like, the guy down the street, literally there is a guy down the street that is a scumbag that will, like, finance anyone.
Sure.
And not explain it, because I've read their reviews. I've heard horror stories from customers that's gone there.
You're going to serve yourself better in the long run.
Exactly.
Is what I'm hearing.
So I always tell people, like, look, I'm never going to dog anyone.
Right.
Read my reviews, read the reviews, make your own decision. Like, again, it's all informative stuff.
Absolutely.
But just to emphasize, like I said, I read the reviews. I know, and I've had customers actually come to me and tell me that, and I'm like, that's terrible, because, the last thing you want is to put someone in a situation. I don't know how you could. I couldn't do it. How you put yourself in a situation where you're putting someone in debt way over than what they can afford.
Yes.
And then they're having heart attacks and can't sleep at night and all that stuff. I just don't want that.
I
don't think it's ethical.
I feel the same way with
Yeah.
how the marketplace markets financial services products, specifically mortgages.
Yeah.
I think a lot of the advertising now is about clickbait,
Yes.
capturing attention,
Yes.
with giving as little information as possible. Just
Yes.
some kind of leading reason to click and engage.
Yes.
That's the game.
Yeah.
Get them involved in. So one of the things that I do in that consultation that I was telling you about is I educate buyers about interest rate and origination cost options.
Right.
So if you look online, please do it if you will. You'll find that if you really search through any given advertisement that you see online for an interest rate, it's going to be based on a set of several parameters, and usually that loan offered rate will have somewhere between 3/4 and 2% of the loan amount in origination fees in relation to the loan amount at that rate. So in other words, if you're doing a $300,000 loan, you're probably paying somewhere between $1,500 and $6,000 of additional fees above and beyond the required closing costs
Yes.
to get the rate that's being advertised.
Yeah. So you're paying down that rate, is what I tell people.
So there's nothing wrong with doing that, because
Yeah.
in the long run it may be beneficial
True, could
to someone. But what people are owed, I feel, is an education as to whether that's going to be beneficial to them, so that they can make a decision
Correct.
on the impact of.
So,
of
like,
those.
people will say, "Oh, I can get I don't even know. I'm not even going to pretend to know. I should be more sensitive to the rates, but I'm not."
No, that's okay.
So let's just say today's rate's 6%.
Sure.
All right. We'll just be pulling a number out of my rear end. And they're like, "Oh, I can get a 5.5% rate."
Right.
Well, sure.
Sure
if
you can.
buy it down, they're like, "No, 5%, and I don't have to pay anything. No closing costs. No,
Right.
no. You clearly are being misled here."
Correct. So on
It's like everybody wants all the good stuff, but none of the bad, right?
On
I want
almost
the lowest
any
rate,
offer,
I want no
yes.
close rate. I want,
Right. So
free limo drive to the house, like whatever,
you got to look for where you can look at details of the offer.
Yes.
And when you look at that, it'll spell out what the requisite credit score, down payment, and origination fees are,
Sure.
as well as the loan product in that particular thing.
Amount is big.
Yes.
So people are, I can get,
Loan
a better
size
rate.
matters.
Yeah, and they're like, oh no, and they're like, oh yeah, it's how much is your loan? Oh, it's only 80,000. No, you're not getting a good rate.
Yes.
You're not getting the best rate.
Right.
The best rate's like on 400,000 or 500,000.
Sure.
And what are you talking about? I go, I understand basic finance of how things work. Like,
Sure.
there are, again, everybody wants the best though, right?
Yep.
Like,
Absolutely.
It's just wild. But they do the same thing to me too.
But that's something that I'll actually work up a personalized illustration for that.
So you can explain it
for
to
that
people.
home buyer before they even go out shopping, so that they're aware of how that stuff works. And what's kind of cool is I let them know when we're actually putting your loan into processing. What I'll do initially is I'll disclose to you the rate with the closest to zero origination fees.
Yes.
Okay. I'll show you a higher rate with a credit payable to you that you could use to pay your settlement costs, or I'll show you a lower rate where you could pay additional fees at closing to get a lower rate.
Yes.
And I'll show you how many months you'd have to keep the loan in order to recoup
that. Yes.
that additional money you're
Yes.
paying at closing to buy down the rate.
Now that last piece is very important because a lot of people do not do that.
Correct. So
Most people don't even know anything about what you just talked about.
well, they should work with me because I'd love
I'm just
to
saying
teach them.
most people, I don't think
Absolutely.
understand.
I love educating people. I think to a large extent, I am an educator in spirit.
Yes.
You know, and a lot of what I do in my business is I spend time not only qualifying but consulting with the clients to make sure that they have a predictable experience.
Yeah.
And that they get a good value. And that I have a lot of fun delivering that. And I'm constantly tweaking my process. You know?
Yeah.
But those are the fundamental components of the process that have been the same over many years.
Oh, yeah. And it's funny because I try to explain that to someone, or actually probably many people, and they're just like, what are you talking about? I'm like, you don't understand. Like, the rate is very manipulative. Like, you can go, how you explain it, up or down.
Yes.
Like, I was like, this is how people can get money back from having a higher rate.
Sure.
I mean, if some people are like, I don't really care because it's going to be a rental property, so give me money back.
Right.
Higher rate.
Sure.
Because I'm making money off the whatever, so fair enough.
And different answers
It
are
could be,
okay.
yeah.
You know, for different circumstances and different risk tolerances and different ways of viewing things. You could have the same offering to three different people, and they could make three different selections on how they want their loan offered. Something specifically that I do for the client is I present all the options.
Yes.
You know, and so that they understand how that works in context to their finances.
Yeah. Because a different solution for everyone is a real thing.
Absolutely.
But it's interesting because that's another piece of the puzzle, which I think a lot of people don't necessarily realize. So let's talk about some challenges that you faced. You know, every small business has.
Yeah.
Unless you're the magic one that hasn't.
No. I've had big challenges over the years, and like most businesses, we've had some hurdles over the years. The biggest one for me that I can think of off of the top of my head was the housing crisis.
Yeah.
That went on from, it probably actually started in late 2007, but it went really hard and heavy from 2008 to 2013.
Yeah.
And, we experienced diminishing home prices, a lot of foreclosure activity. Mortgage companies, banks were just going out of business left, right, and center. Fortunately, I got the business started in 1999, so I had been around for a while.
Yeah.
And thanks to a lot of hard work,
Yeah.
a lot of perseverance, and the support of some great staff members and several really good strategic partners that stuck with us through that. We were able to weather that storm.
Yeah. I saw this saying that's been floating around online, and it says, I've met a lot of entrepreneurs in my life, and I'm an entrepreneur myself, and they're not, none of them are really the smartest people in the world.
Right.
They're just people willing to take risk and work really hard.
And you're going to work,
And that's the truth.
And that's what I tell everybody. You're really going to work. You're going to work hard no matter what you do.
If you're a person that cares about
But if you really
work,
like what you're doing,
Yes.
you can work a lot of hours doing it, and
it doesn't
not
feel
be
like
exhausted.
it doesn't exactly, and it doesn't feel like work.
Yeah, if your work energizes you and you feel rewarded by it,
Yes.
I feel the rewards of my work because the systems and the processes are value driven. You know what I
Yeah.
mean? And I like giving. I like doing it.
Yeah.
I actually like getting up in the morning and looking forward to, hey, I'm going to be meeting with this client today, and I got an application, at this time, and and I've got a training session with a couple of new licensees at this time, and it's really fun. And these are all challenges that I put in front of myself.
Yeah.
You know, I mean, I could work less, you know, but I like doing it, and I enjoy delivering these services. It's a lot of fun. But if you love what you do, I've heard the
Yes.
expression, you never work a day in your life.
It's true. It's very true.
Yeah.
It's very true.
But there's no such thing as a 9 to 5 if you really want to be successful, in my opinion.
No, it was funny because I had another guy here. His name's Danny, and he always everyone thinks I'm crazy because you turn a 9 to 5. Entrepreneurs are insane because they turn 9 to 5s into 9 to 9s.
Yeah, routinely.
Yes, yeah. Well, let's talk about any initiatives and projects that you're excited about. What you got going on that's new, that's coming up?
Oh, well, off the top of my head, what I can think of right now that we're promoting is this is actually an affordable housing initiative.
Okay.
Okay, this is something that we're pushing for clients with moderate income levels.
Okay.
And moderate income is pretty far-reaching. I mean, in our area, typically that's a household income of equal to or less than around $94,000.
Okay.
You know, so it's a lot of the households in the greater Dayton area. But there's a loan product called Fannie Mae Home Ready.
Okay.
And with some of my wholesalers, the lenders that we work with, we are promoting a few different options for this particular loan product, and it can be used for both refinances and purchases.
Okay.
What it does is for people that fit into that low to moderate income and they're eligible for a conventional loan, they have 3 options that they can use their Fannie Mae Home Ready Pass for.
Yeah.
So they can either receive a significant discount off of their settlement costs. They can apply a 2% credit towards their down payment if they're buying. So
Yeah.
if they're a first-time home buyer, they don't need to put 3% down. They get a lender credit for 2% of the purchase price, and they only have to put 1% down.
Yeah.
If they've owned a home in the last 3 years, instead of being required to put 5% down, they only have to put 3% down.
Wow.
Because the lender credit will take care of that other 2%. The third option is that they can receive something called a 2-1 buy down that discounts their interest rate for the first and the second year. So their loan is a fixed rate mortgage, but they get a credit from the lender that will reduce their interest rate for the first 12 months of their payment. So let's say they had a 6.5% rate, they'd get 4.5% for the first 12 months.
Wow.
The second 12 months, they get a 1% discount on the rate. It's called a 2-1 buy down. For the second year, they would receive a 5.5% rate, and for the third year, they'd have their fully amortized, 6.5% payment. Hopefully, by then, interest rates have dropped enough
That's
that it's
the goal,
worth
right?
refinancing, right?
Yeah.
But what it does is it'll allow entry-level homeowners and moderately, homes that are being bought in a modest price point, to people to ease into that home ownership experience. And just so you know, even on a relatively modest home price, let's say $250,000, that is thousands and thousands and thousands of dollars of savings when you reduce your interest rate the first year by 2% and the second year by 1%.
Because all the interest is up front.
Absolutely. So whether you take it as a benefit in the form of a reduced settlement cost, reduced down payment, or reduced interest rate on the short term, it's a powerful package through this Home Ready. And and we're getting the word out about that through our strategic partners, and it seems that we're getting a lot of interest.
Yeah.
So that's what we're promoting now.
That's exciting.
Yeah.
That is exciting. Well, that's a good one to talk about
Yeah,
there.
thank you.
Yeah, because that's something I've never heard of before, but it makes sense.
It's exciting.
Coming up with creative new ways to get things done. That's what I always say.
Absolutely.
Yeah. So wow, have you ever seen anything like that in the history of you doing what you've been doing with the whole mortgages? Like,
Yeah. So we're pretty fortunate. We do we get opportunities to be able to provide benefits to our clients, and when there are strategic advantages other than just our core competencies to offer, I make sure to get the word out about those as fast as possible.
Right.
So I'll span the strategic partners, do training messages, do training workshops, with their teams, at their offices. I like getting the word out about something that is exciting, that'll supercharge. But this is really something that's happening right now that's pretty cool.
Wow. Well, that's getting us basically to the end here, I should say. So tell people, how can they get a hold of you? What's the best way? We have website, Facebook. You let me know. We'll have it pop up on the screen here.
Well, it's mortgagenetworkohio.com.
Okay.
That's my website. If anybody needs to buy a home, refinance, they're obviously welcome to get in touch with me.
Yep.
And I'm just going to be bold. I'm an old-fashioned guy. I don't mind offering my phone number.
All right. Well, tell everyone your phone number then.
So it's area code 937-609-0115. And if you're buying or refinancing a home, or if you need a referral to a top-level realtor in the market,
Yeah.
a really good home builder building in your area, or a financial advisor, or if you know someone that's really good at one of those three things, call me on that too. Because these strategic partnerships are what make the world go around.
And also, if you need furniture, he knows a really good furniture guy.
I know a great furniture guy. Knock your socks off.
All right. Well, that leads us to our last part, which is, anything you want to talk about. Anything, any words. I always say words of wisdom. Any advice. It's kind of like the final hurrah. Leave on a positive note is what I always say. So.
Okay. So let me. I'm going to just try and encapsulate just a little piece of advice. You know how we were talking earlier about what a big fan I am about Dayton, Ohio.
Yes.
And particularly our housing market, and what a wonderful thing that's been for me, professionally. Something that with interest rates increases that we've experienced over the last few years, they're starting to come down.
Yeah.
But they're a lot higher than they were, 3, 4, 5 years ago.
Sure.
Okay. And home prices have gone up. There's been a certain segment of the home buying population that has kind of assumed sort of a wait and see attitude. I'm going to wait until interest rates get back to 3%, or I'm going to wait for these home prices to go down. I got really bad news. Home prices are not going to go down. They are. If you just look at historical averages, they climb a little bit every year. Some years they go up at a pretty good clip, but in about 19 out of 20 years over the last 100.
Yeah.
The home values have gone up.
Yeah.
Okay. So what people should do is, if you're in a financial position to buy a home, home ownership is a lot better to do now than later.
Always.
Because sometimes doesn't get here.
Yes.
And home prices are going to continue to go up. But if you buy now, you can always refinance when it's opportunistic to do so, to reduce your housing expense later.
Yes.
And you bought in at a better price than you would 3, 5, 7 years.
The old saying, marry the home, date the rate.
Yes. Yeah, that got real popular for a while. But it really is good advice, because most people are smart and intentional enough that when there's an opportunity to save money, they'll do so. And what's more, clients, that I work with, we monitor, their accounts, and I have triggers set up to initiate a refinance process at an agreed to rate that I set up with the client when we're closing their loan.
Yeah.
So that's part of my services, is I have a trigger rate that's set up in my system so that we can initiate a refinance at a predetermined amount of savings.
Yeah.
So, but buying now rather than buying later is better if you're in a financial position to do it.
Yeah. All right. So don't put it off, is what you're saying.
Yes.
All right. Well, that's good advice, because I know a lot of people are kind of, like you said, sitting on the sidelines trying to figure it out. So
yeah. And in the meantime, interest rates have kind of been flat, but cost of homes have been going up, so that's to their disadvantage.
Right.
We are, again, very fortunate in the Dayton, Ohio area to live in an affordable housing market. Relative to other markets that are even nearby to us.
Yeah.
So take advantage of that. It's an opportunity. Owning a home in our market is about as achievable as it is anywhere.
Yeah. Well, very cool. Well, Mike, I've had a pleasure. I hope you had fun.
I've had a great time. Thank you very much for having me.
Good. All right. Well, I'm very grateful that you came and did it for us, and I can't wait till we get it out there and share it with everyone.
I'm looking forward to it. Yeah. Thank you very much. Please send me the link.
Absolutely. All right. You have a great day.
Thank you, Frank.
All right. Bye.
Follow to our Facebook, LinkedIn, and YouTube, or your favorite podcast platform. Be sure to sign up for our email list and receive an email to watch the show. Wednesday at 8 a.m. Do you know a great Dayton business that you would like to see on the show? Visit our website at DaytonApproved.com and click on the Contact tab and tell us who you'd like to see.